I do want to welcome in our next guest, though, broaden out our focus. Joining us this morning, Dale Smothers, President and CEO at RDS Wealth Management. Dale, great to see you. I haven't seen you in the new year. Happy New Year to you.
Happy New Year.
Thank you. Alex and I were just talking about Alibaba, but really more focused on all these headlines we're getting in 26. It's very much a headline-focused market. We're driving through these headlines, but we also seem to be shrugging them off pretty easily. I mean, we see these moves, but then we just flip right back. What are some of your takeaways from the market action we've seen this year so far?
Marley, what a read on the market so far. It's exactly right. It's driven by headlines, then we shrug them off. So here's the word going into 2026. We talked about this right before 2025 ended. Discipline. We've got to maintain discipline, stick with the plan. There are a lot of reasons that we are optimistic here. RDS Wealth is very optimistic going into 2026. We had a GDP print that was unlike anything we've seen in a long time. We've got an incoming Fed chair, at least by the admission of Donald Trump, that will not look at the GDP number as a reason to raise interest rates. So perhaps continued in a cutting trajectory here into 2026. We've got growth like we've not seen, productivity like we've not seen, and earnings season is coming up on us. I think these headlines are going to be ones that we consume as an investor, and we see the market go higher on the backs of that, continuing to climb this wall of worry into 2026.
So as we continue to climb this wall of worry, what are some of the risks? What would make us fall off here?
Yeah, the biggest underlying risk, I mean, theoretically, Greenland's behind us, right? So the biggest risk that's going to persist throughout 2026, Marley, is what if AI is either not profitable or companies realize that there's no need to continue to build out this infrastructure that they are currently doing. This AI infrastructure build out has produced what we've seen in 2025. Going into 2026, I think it continues. If the questions begin to be answered with, well, we're just not sure how we're going to turn this into profitable businesses, or how we're going to continue to consume as much energy as we need for these data centers, or maybe there's a more efficient way out in space, this could cause a little bit of a headwind for the market. And that is, in our opinion at least, one of the biggest underlying risks that we know today.
So if discipline is the most important way that we might handle that and combat that, how should we be approaching the potential that AI might not play out how it's expected? And also, where are you seeing opportunity that you do expect to play out how it's expected?
Certainly. I think some of this opportunity is in the fact that headlines do move the market in a way of overreaction, Marley. We saw this Greenland announcement, and within days we saw percentage points. When you start measuring index moves in percentage points, we're in a sell-off. And what that means is that a lot of the underlying stocks that make up that index have fallen significantly lower than the overall index. So here's our number one strategy that we have right now, is that we're heavy for optimistic money, for long-term growth money. We're heavy in the indexes, S&P 500, for instance, or the NASDAQ. We buy SPY, QQQ. We hold them and then buy into names that get oversold. For instance, a great example is Royal Caribbean. Royal Caribbean in their little bit of a downtick here. We've bought more of that. We've been buyers of Royal Caribbean for over a decade now. Good, strong dividends, nice earnings. They are currently cutting their debt. That's a very good place that we see opportunity to not only get continued growth, but also a little bit of a dividend in return there as well. So there's one strategy that we use, is being heavy in the index and buy the names that get pulled down, perhaps due to a headline of some kind.
I love to close out on a little bit of speculation. When we get that move, if we get it, we'll revisit this conversation and talk about how you got there. We'll pick it up. But Dale, thank you so much for being with us. Always a pleasure to see you and talk to you. Dale Smothers, President and CEO at RDS Wealth Management.